Nifty continues to be strong above the 7,820 mark, led by the metals pack, as we just told you. Names like NMDC, Hindalco are up close to 7.5%, 8%. So looking in very strong. Mayuresh Joshi, fund manager, Angel Broking, is now with us. Good afternoon, Mayuresh. You think suddenly everything has changed in 2 days, and we are looking in strong with a positive outlook?
Afternoon, Pankaj. I think not really. Clearly, if you look at the global backdrop, I think the nervousness related to Chinese data, what the Fed does in its FOMC meet, still lingers around. And clearly, even on the domestic front, I think all the host of issues that we've been discussing related to corporate earnings, related to how the monsoon session of Parliament has gone, the probability of GST. Again, I think there is some amount of ambiguity related whether it will get rolled out, even if it gets cleared by April 1st, 2016. So clearly, I think all these issues are playing at the back of the mind. So I think yesterday was clearly an indication of how shorts were getting covered. But I think one really needs to wait for the markets to stabilize. I think if something goes wrong globally again over the next few days or weeks, you might have a reversal in the market. So I think it's best to wait for markets to stabilize first. But the volatility, in our opinion, would continue at least over the next few weeks.
Right. What would you say at 7,800, 7,830 where we are? You think we are still fairly valued, or you would want some more confirmation that the bottom has been made?
No, looking at the trend on how the corporate earnings have panned out, clearly I think you're still at the lag end as far corporate earning revival is concerned. So Q2 numbers are not expected to be great. And clearly I think a whole host of analysts are now trying to peg back the recovery back to first half of FY17. So clearly I think if I take into account corporate earnings as a backdrop for re-rating of the markets and where the markets are currently positioned, I think we are reasonably valued. So I think in that sense itself, I think you might see some amount of spike up happening if FOMC does not initiate any kind of a Fed rate hike in the September policy, and if RBI initiates some sort of rate action along with their management commentary, which can be supportive for the markets, which a lot of market participants are hoping. So clearly I think if you look at all these tenets and the facets of how the market dynamics are working out, yes, I think the range for the Nifty can be around 8,200, 8,300 on the higher side. But I think Nifty will face tough resistance around that level. And again, I think at the current juncture, our take is that we are fairly valued because earnings are not picking up. And unless earnings pick up, I think it is very difficult to re-rate the market from the current level.
How would you look at the pharma names, the correction over there? Because earnings have materially not seen any major downgrade, but maybe redemption pressures are forcing pharma sector to see some bit of selling pressure.
So clearly, as a pack, I think pharma sector generally should, considering the trailing averages, is overvalued. So clearly, I think we're having a very stock-specific approach when it comes to the pharma space. And clearly, out of the top-tier names, Sun Pharma is something that we like. Yes, I think it's a stock that mostly, I think, has got discounted related to how the Ranbaxy integration issues will pan out. But our own take is that US sales should start holding up from FY17, and any faster resolutions happening on Halol and the other plants, I think that will be a value add as well. So clearly looking at the kind of cash positions, the kind of A&D applications, 442 applications already made by Sun Pharma as a combined entity, and I think 159 approvals are awaited. So clearly I think you've got a huge pipeline coming through from that aspect. And even on the domestic formulation business, it's close to 9.2% in terms of market share, followed by Abbott, which is close to 6.5%. So there's a huge amount of potential value unlock happening from the combined entity, even on the domestic front. So I think Sun Pharma, Aurobindo Pharma, where we believe, I think the A&D application pipeline is equally strong, and the injectables that are expected to come through, as indicated by the management, around 18 approvals, along with the acquisitions of Natrol and Actavis, I think that has actually propelled Aurobindo to become a $2 billion company in terms of top line, 80% coming from formulations. And again, valuations are not looking as expensive as the other pharma companies. So Aurobindo Sun is something that we'll prefer from the pharma space.
What would you make of the metals pack, NMDC, Hindalco, anything you like? Very steep correction. Of course, earnings cuts have also come along with that, and the problem of debt that most of these companies would have taken during good times.
So you said it all, Pankaj. I think most of these companies are getting hammered for all these reasons. I think the commodity super cycle not working in their favor, again on the downside. Realizations are majorly down. And yes, I think you've seen some amount of cuts come through from Glencore, which is expected to support at least the prices from a short to medium term perspective. Albeit, I think the pressures on realizations would continue. And even though the raw material prices have fallen equally as well, I think the volume offtake would also be a cause of concern. So I think the demand supply dynamics is something to be watched out for, both domestically and globally for a few of these companies. Add to that, I think the leverage burden that these companies face. I think the interest and finance costs take a huge toll on their EBITDA and EBITDA margins respectively. So I think I would wait and watch. I think I'm not rushing into the rush or the stock price movement that we've seen in metal stock over the past 2 days. Clearly, I think cash flows are going to get affected for the next 2 to 3 quarters. Realizations are going to remain extremely soft. And again, I think we would visit the counters probably after Q2 numbers. But again, I think a very, very cautious stance on metal space generally at this point of time.
Right. So, any sort of such temptation, the feel of getting missed out in the metals pack is something that, should be avoided by any trader and investor?
So from a trading perspective, Pankaj, I think it still becomes some sort of a trading game. But clearly from an investment perspective or a fundamental perspective and a structural perspective, that is, even if there are structural changes which might happen after the next, I do not mind missing some part of the on these stocks. So clearly I think I would wait for numbers to probably come through and get authentication that the numbers are here to stay on a consistent and a constrained period of time, and only then I'll take a call. But again, I think clearly I don't mind missing a rally, as I said, on these counters if it happens over the next 2 to 3 months.
Right. The news flow that came in on telecom, anything that you like over there? Arcom, would that become your preferred pick, or Idea or Bharti?
No, clearly I think one really needs to understand the norms in greater detail. So I think we need to read the fine print, and clearly I think it depends from circle to circle their operations through. That's point number one. Point number two, I think the constraint related to 25% of the spectrum that is already there. So I think that is one aspect also to be seen, and which operator probably has hit the ceiling in that front. And again, I think it is a benefit industry. So I think as an industry perspective, I think the consolidation and the spectrum trading norms would benefit a lot of end users as well. Add to that, I think the revenue sharing would also be of great help to these companies. So clearly I think Arcom with the excess spectrum that is cost system are probably might be beneficiaries, but I think we still need to do our working at our end. So I think highly leveraged companies at this point of time, with the kind of spectrum payments that they've done, is going to take a toll. Again, the kind of capex plans that a lot of these companies have, for example, Idea around 6,500 crores, that is going to take a toll. And a lot of equipment specifically that has been acquired in 2008-9 also needs replacement or refurbishment. So clearly, I think you are seeing both capex and opex for these guys go up. So really one really needs to understand how and which circle will benefit, which operator will benefit. So I think we'll come back to you on all these details when we've done the working in detail.
But anything that you like as of now, I mean, irrespective of this news flow?
So irrespective, I think we will still wait and watch, because I think near-term concerns would play on balance sheets with the excess spectrum that these guys have paid. Yes, I think data as a percentage of revenue is started to inch up for a lot of these guys. But again, on a net debt to EBITDA basis, I think the core ratios have inched up. So for Idea, for instance, again, it would inch up from 1.3 to 1.69. What happens with Bharti African operations, again, would be a little bit of a subdued performance for the quarter to come. So clearly, I think the ROEs are going to get subdued for a lot of these guys. So as I said earlier, I think we'll need to wait for results to come through before we take a constructive call on this sector.
Right. How would you view the housing finance company? Indiabull Housing Finance has raised about $500 million overnight. The issue got oversubscribed, or good demand coming in. You think housing finance companies, after recent correction, a lot of talks about how things would go ahead, are now looking in better placed?
We like that. I think as a team, we generally like the housing finance team, and within this, I think LIC is something that I prefer, because it's underperformed Indiabulls at this point of time. The cost of funds has come down because of the shift from high-cost bank deposits to bonds. The yields of investments has stabilized at 10.85%. Clearly, I think the kind of loan growth that we saw for around 18% for the quarter gone by was very, very impressive in my opinion. And asset quality in terms of gross net asset ratio at 0.6, net asset ratio at 0.33, clearly stood in favor of LIC Housing. So at this point of time, I think within the pack, I think because of the underperformance of LIC Housing Finance and supported by valuations around 2.1 times price to book FY17, I think it looks like a very, very impressive kind of a counterattack that one can actually lay their bets on. So I think we're very, very positive on LIC Housing Finance from a long-term perspective.
Private banks, how would you look at them?
We like that. I think we have perennially been liking private sector banks. And again, I think one really needs to have a longer time horizon. I think the correction that you saw in private sector bank has taken a toll. And again, I think I'm not really sure on why such deep cuts came through, at least on the private side. I think they've been holding up pretty well when it comes to asset quality. Their capital adequacy is extremely strong. And clearly, even if you look at their balance sheet dynamics, credit growth has held up for a lot of these guys. Asset quality has held up. And clearly, if you look at management commentaries, and again, assuming that credit costs have actually inched up for these banks, and again, analysts have held out higher credit costs along with the counter-cyclical provisions that a couple of these bankers already have done on the balance sheets, like an Axis and a Yes. I think that definitely ensures that their balance sheet growth is here to stay. So I think any revival that you probably see, both in terms of capex and credit growth coming through, I think is going to aid these companies significantly. So earnings growth in excess of 21% for Axis, 24% for Yes Bank. Again, I think ICICI, the retail advances in excess of 25%, asset quality holding up. I think we like all these banks. So clearly, I think even though they trade at a premium to the public sector counterparts, all these factors, I think, become a distinguishing point when you talk about a 12-month perspective in creating value for investors.
Mayuresh, just stay on with us. We're taking a quick break. Coming back in 2 minutes, market closing on the other side of the screen. About 5.5 minutes remaining to close. It's a good session. We are most likelihood closing about the 7,800 mark. It's still about 6 minutes remaining, and in the last 5 minutes we've seen a very marginal correction of about 25 to 30 odd points. So there is still some of that ETF selling that is coming in, but I don't think it'll be major, because at the high point of the day we were up 142 for Nifty, 450 for Sensex, so still up 115. So it's not that bad. I think that maybe over a period of time or over the next few days, this selling number would reduce drastically, and then probably only the next news flow that comes in would decide on the number. Mid-cap index up 1.8, small cap up 1.7. The breadth today has been fantastic. It continues to look quite good. As I told you, most of the names are just off the day's high. It's not that they are particularly in red. So still 82% as far as advances are concerned. We are talking to Mayuresh. He's still with us. Mayuresh, a lot of interest is coming back into the real estate stocks. However, names like JLL, Knight Frank, the data that they give say that residential sales are not that great. Do you view real estate stocks as a buy opportunity, or it continues to be a sector that has given a lot of pain and that's why you would avoid?
Again, clearly, I think all the attributes related to the real estate pain is emanating from facts which are well known to the markets, whether that be pre-sales not happening through, oversupply coming through, leverage balance sheets for most of these players with a few exceptions. But clearly, I think the sector is going through a lot of stress and pain at this point of time. The unsold inventory, both in terms of residential properties and commercial properties, not picking up steam in terms of improvement in realizations, is going to create a huge amount of issues for annuity incomes for developers who are dependent on these properties. So clearly, I think real estate is something that we had avoided till this point of time, and we'll continue to do so. I think we really need to see some amount of sustained cash flows start coming onto balance sheets, sustained demand to start flowing through the economy, and unless that happens, I think very difficult to make a constructive case out of real estate at this point of time.
So it's a complete avoid, despite valuations being attractive for names like DLF, some of the others that have corrected a lot.
Oh yes, at this point of time.
Right. What are the sectors that you like apart from what we've spoken among the mid-cap space? Anything on the tire, auto ancillary, which has corrected a lot? Do you think that's a space to look at?
So within the mid-cap universe, I think we're being extremely selective. So mid-cap cement, as we discussed even earlier on your shows, is something that we continue to like. And the entire thesis for the theme is expected utilization levels picking up, the expected capex and investment cycle picking up. And with the kind of front-end expenditure that the government has done, I think we're expecting a lot more to come in through in terms of infrastructure orders. I think generally the ROEs for these companies should expand. And a lot of these companies have taken timely capacity expansion. So they did suffer during story, the economic downturn. But once I think the economy starts recovering, I think the utilization levels start picking up, the ROEs will start reflecting much better numbers. So JK Lakshmi, JK Cement is something that we continue to prefer. Within the auto ancillary space, as you mentioned, I think tires is something that we really like as a structural story. Yes, I think the top line growth might be a little bit muted for a whole host of these players because of the Chinese competition. And again, I think the demand from the OEM side not picking up as expected. But clearly, I think with raw material costs going down, I think the structural improvement in balance sheet should be very, very evident. And clearly, I think if you're looking at the stocks within the sector, I think JK Tires is something that will still continue. Capacity expansion taking place. Tornado, its Mexican operations are doing extremely well. So I think these are a few stocks that we like. Bajaj Electricals probably from the mid-cap discretionary basket is something that we believe that the EMP is a huge turnaround story. And Inox Wind, as I mentioned earlier as well, I think we believe that there is huge potential for this stock going forward in terms of margin expansion, good order book, and again I think timely capacity expansion will ensure that the margins hold up.
Mayuresh, just stay on with us. About 90 seconds remaining for closing. I just want to focus on stocks that have done quite well. Firstly, it's been a great day for the market. There was this contest in the morning as to this gap up opening that we are seeing. Will it be sustained or not? We opened up 100 points. We're just about 2 minutes away from closing, and 118 points up is the closing. So this gap up opening has sustained. Yes, there was some selling pressure in the last 15-20 minutes. The FI number may not be on the positive side, but still there is some bit of buying happening in, and that is quite evident in the market. Tata Steel on your screen, a really bombed out name. It's up 4.5% today. Yes Bank 2.8% higher, 716 for Yes Bank. PNB up about 2%, 135. Bharti Airtel up 1.8%, 354. Infosys up 2.5%, 1,087. Reliance up 2.5%, 869. ITC flat with a positive bias. NMDC, one of the top gainers today, 103. This is a name that has been written off completely, and now you tend to see some bit of buying coming into this name. BHEL was up to about 215, 216 I think in the morning, but then corrected towards the close. Sun Pharma was a 230 factor name. It was in the green and then corrected quite a bit. Power Grid down about 0.5%. Z Entertainment up 4.5%. HDFC Bank. This name actually never fell. So it's a name when the markets actually recovered. It's up about 1% or so right now. HUL up about 0.25%. Asian Paints up 3.5%. Kotak Mahindra Bank on your screen up 1.7%. Tech Mahindra down about 1% or so. That's the closing bell. 116 points as far as Nifty is concerned. Sensex 362 points on the higher side. I don't think adjusted closing will be a lot different from what we have seen. It should be about. It will definitely be about 7,800 7,800 level, so it has to be taken in positively despite the last sell-off that we saw in 15-20 minutes of trading session. Bajaj Auto 3% higher, Grasim about 2.5%, Ultratech 3.5%, ICICI Bank 1% higher, SBI up 1.25%. Top gainers on your screen, NMDC 8% higher, 103.5, 3.5 million shares traded for NMDC. Hindalco up about 7.7%, 78.3 for Hindalco, 15 million shares. Vedanta Limited up 6.5, 99.6 for Vedanta Limited, 14 odd million shares traded. NTPC up 5.8, 10 million shares traded. One of the top gainers. We saw an upgrade coming in from Citi 2-3 days back on this name. Tata Steel up 4.5, 239 as far as Tata Steel is concerned. Z Entertainment 4.5%, almost close to 4.5, 386. It was a name that did not do well in the morning but then spiked up. Kane India 4.5% higher. Vedanta, as we told you earlier, was also doing well, 150.90. Metals high beta name continues to do very, very well. Tata Motors 345, 4% higher, 8 million shares. Tata Motors has really been a big underperformer, now trying to gain some sort of outperformance. Maruti likely to be included in the MSCI with what happened a couple of days back as far as the FII holding is concerned. 4,200 plus for Maruti. Ultratech up about 3.5%. Asian Paints up 3.5, 819, 1.4 million shares for Asian Paints. Bajaj Auto 3% higher, 2,270 as far as Bajaj Auto is concerned. So it was a mix of high beta and defensives that did well. Bosch really not a loser, just 0.66 down. I mean, it's really not a loser. So there were hardly any losers today. Bosch, Tech Mahindra just down 3 rupees. Again, really not a meaningful move that we are seeing on Tech Mahindra. Sun Pharma down about 5.5 odd rupees. Not much apart from this. We can find maybe a Wipro, maybe a Power Grid would be some of the other names that are slightly on the lower side. Mid-cap index did quite well after 2-3 days of underperformance in this market. So let's look at the mid-cap universe and what essentially did well. So most of the names that actually fell in the last few days, we did see some sort of buying coming in over there. Amtech Auto was up about 11%, 30 rupees. It's a name that has not done well of late. Lanco, it's a 20 rupee name, but it was up. It's a 3 rupee name, but it was up about 20 odd percent. Amtech Auto, 11 odd rupees higher, 30.5 rupees. McLeod Russell was up 10%. Ashok Leyland up 6.5, 87.45. Union Bank up 6.5, 170 odd rupees for Union Bank. It's a good PSU bank that has, so most of the large cap, mid cap PSU banks have, seen some sort of buying traction coming in. Container Corporation of India 5.7% higher, 1400 rupees for Concord. Max India up 5.5. JSW Energy another 5%. Amara Raja Battery, we saw a downgrade from Goldman. It was down yesterday. Today up 5%, 948. Jaiprakash Associates 5% higher, but it's a 10 rupee name, so it's just up about 45 paisa in that period. Power Finance 4.5% higher. Shipping Corporation up 4. Z Entertainment up 4. Ramco Cement, Bhushan Steel, Tata Communication, Eicher Motors, Pfizer, and the list goes on. And these are names, that have not done. They have seen some selling pressure in the past few days, and that's why probably we are seeing some sort of buying coming in into these names. Mayuresh Joshi is still with us. Mayuresh, what would you make of a name like JSW Energy? The acquisition that they have done, you think now it gets a bigger player and it's one of the best utility companies to own?
So clearly, I think two sides to look at for JSW Energy. If you look at the power portfolio before the acquisition, out of 3.1 gigawatts, almost 1.5 gigawatts was more or less on short-term trading volumes, and the short-term realizations have more or less held out for the company. Now, with additions of the two projects of JP Group, I think what you're probably looking at is the mix between thermal and renewable getting down to around 70-30. And again, I think the mix gets a little bit impressive because I think the long-term purchasing power agreements are very much in place for the two units that is acquired. So I think the risks for the stock is how the grid connectivity, specifically in the southern states, start getting through it. And if that happens, I think the premium for their short-term realization will actually start coming down. And again, I think the rupee depreciation is going to play a role. On the positive side, probably benign coal prices is going to help the company in a big way, because I think again they do these spot purchases, at least for the short-term trading. And clearly, I think, as I mentioned earlier, I think with long-term PPAs coming through with these units, the ROEs can expand going forward. So I think it's a wait and watch. I think I'll basically need to look at how the cash flows come through for these operations that get merged from the quarter to come. And though not comparable on a year-on-year basis, I think it'll be an interesting proposition to watch out for. So it's a wait and watch, at least from my side. I think if the numbers are impressive, then we'll decide what to do with the stock.
Mayuresh, thank you so much for joining us here this afternoon. Hope you have a great day going ahead. Adjusted closes with us. 7,818 is where markets have adjusted themselves. We told you in the last 5 minutes there was a lot of selling pressure that came in, but it has adjusted itself, 7,818. So a very good close, 130 points higher. We opened 100 points gap up and then adding on to 30 points towards close, and more importantly, absorbing if there was any major selling pressure that was there. Those figures would only be with us tomorrow morning. Taking a break, coming back in 2 minutes. Don't go anywhere. Lots more lined up on the other side of this break.